In this week's markets update, it looks like traders have been able to put the disappointment surrounding the collapse of Trump's American Health Care Act behind them, and the focus this last week has swung to strength in the US economy. A closely watched measure of manufacturing activity, the Richmond Fed Index, hit a 6-year high, and a measure of consumer sentiment hit the highest level we've seen in 16 years. And while it's old news, Q4 GDP in the US was revised up from 2 to 2.1, and personal consumption from 3 to 3.5, led by services. Westpac expects the Fed to raise rates in June and December, and Fed speak this last week supports that view. The normally dovish Charles Evans suggesting a possible 4th rate hike if inflation rises. We see a stronger US dollar near term, with support coming from a likely rise in a closely watched measure of manufacturing activity, the ISM to be released Monday, and what looks like a robust employment report next Friday in the US. Markets have had other factors to watch too. In the UK, Prime Minister Theresa May executed Article 50 of the Lisbon Treaty, plunging the UK into 2 years of unknown. The pound has been uncharacteristically quiet this last week. The UK has spent 44 years working closely with and within Europe. Perhaps traders are waiting to get a better sense of Europe's negotiation stance, and we should have a clearer view of this after an EU 27 summit on April 29. The pound remains above 124 against the US dollar. In Australia, Cyclone Debbie smashed into Queensland this week, bringing extreme wind and rain. Careful preparation kept the local population safe, but significant damage will have been inflicted on a wide area. Market impact will probably be constrained to inflation. Q2 inflation should likely see a rise in fruit and vegetable prices as a result of Cyclone Debbie, and coal prices have popped higher in the last couple of days. This is the strongest cyclone to hit Queensland since Yassi in 2011. It took over a year for coking coal production to recover the Yassi hit, and coking coal prices spiked very sharply in 2011 as a result. While it's early days, and it may be several days more before we understand how much damage has been done, miners are sounding more optimistic that flood mitigation exercises were much better prepared this time. The data drought in Australia ends next week too. Monday brings February retail sales and building approvals, and on Tuesday we have trade data for February too. We also have an RBA policy meeting on Tuesday, but no change in policy is expected. The RBA will likely increase the focus on house prices on Tuesday, and the APRA has announced an increase in macroprudential controls focused on controlling interest rate only lending in Australia. The Australian dollar has spent much of this week above 76 cents, unfazed by the near $10 drop in iron ore prices over the last 2 weeks to $81. Westpac remains of the view that the Australian dollar should continue to be capped by 77 to 77.5 cents, and that as the Fed raises rates in both June and December and commodity prices weaken through the second half of this year, the Australian dollar should slide towards 74 cents by the end of this year. These are all factors we can talk about in next week's markets update.